Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. European stock sharply lower, United Kingdom retail sales slump. Investing.com, European stock markets were sharply lower Friday, on renewed fears that aggressive monetary tightening will result in a global recession. By 3 to 55 ET, 7 to 55 GMT, the DAX in Germany traded 1.8% lower. The CAC 40 in France fell 1.4%, and United Kingdom's FTSE 100 dropped 0.4%. Warnings of an impending global economic slowdown by both the World Bank and the International Monetary Fund have hit sentiment Friday. With intermediate yield, the World Bank's chief economist saying he was concerned about generally sluggish a period of low growth and high inflation. Further evidence of this slowdown emerged Friday as United Kingdom's retail sales posted their sharpest fall in the year so far in August, dropping 1.6% on the month and 5.4% on the year. The figures were well below analysts' expectation for a drop of 0.5% on the month and 4.2% on the year, and add to a picture of an economy sliding quickly into recession. Attention will turn to the release of Eurozone CPI data for August at 5 ET, 5 GMT, which is expected to climb 0.5% on the month, up 9.1% on the year. The European Central Bank hiked its key interest rates by a historic 75 basis points last week, and suddenly more hikes ahead as the policymakers attempted to get on top of the soaring prices. In corporate news, Uniper ETR UN01 stock fell 12%, with Germany close to taking a controlling stake in struggling gas importer, potentially paving the way for a full nationalization of the firm. Germany also placed the German subsidiary of Russian oil giant Rosneft under trusteeship on Friday, handing control of the PCK refinery in Sweden to federal regulator. Oil prices stabilized Friday after the previous session hefty losses, but were headed for a third straight week of losses on fears that aggressive monetary tightening will hit global growth and thus fuel demand. The crude market has also been hit by a strong United States in the wake of the hot United States inflation data, which makes oil more expensive by buyers using other currencies. By 3 to 55 ET, 7 to 55 GMT, United States crude futures trade 0.2% lower at 84.97 a barrel, while the Brent contract for both contracts tumbled around 4% on Thursday for the week. Additionally, gold futures fell 0.8%, while Euro or USD trade 0.4% lower at 0.9957. United States stock slipped while yields risk fed in focus. New York returns Wall Street indexes were firmly in the red after a choppy start to Thursday session, while bond yields rose as investors digested economic data that provided the Federal Reserve little reason to ease its aggressive interest rate hiking cycle. Oil futures tumbled more than 3% on demand concerns and after a tentative agreement that would afford a United States rail strike as well as continue United States dollar stage with expectation for a large United States rates increase. Full story. Economic data show United States retail sales unexpectedly rebounded in August as Americans ramped up purchases of motor vehicles and then out more while taking advantage of lower gasoline prices, but data for July was revised downward to show retail sales declining instead of flat as previously reported. Separately, the Labor Department said initial claims for state employment benefits fell for the week and September 10 to the lowest level since the end of May. Full story. Investors are really expecting an aggressive rate hike after the Federal Open Market commits FOMC meeting next week, but nervously awaiting future policy moves, said Quincy Crobsey, Chief Global Strategist at LPL Financial Nasdaq PLPLA. I think that's all from me. Don't forget to like, comment, share, and subscribe.